Good morning, everybody. Good morning. Happy Monday to everybody. I hope everybody had a great weekend. I know it was 4th of July weekend, so that's always busy. I'm sure, if you guys are like me, it's like there's family, there's events, there's everything going on. And then the week leading up to 4th of July just seems to be crazy. And it seems like this one was actually extra special because there's an obvious reason why, right? It's a 250th year of America. So it was even bigger than usual. So pretty cool. Hopefully everybody had a great weekend. So welcome in. This is, let me just give you, Tracy, good morning to you. Happy morning to you, Tracy. Thank you for being here. So let me tell you a little bit about what we're going to be doing today. And then we'll spend a little bit of time just kind of hanging out, kind of letting the live stream kind of get going and stuff like that. And then we'll jump into the content. So what I do here is I go through some real estate news, something kind of more kind of current news, what's happening in real estate. And there's kind of like a lot of crazy stuff happening in our industry. So we're going to dive into some of those articles. And what I do is I just read some of the news, go through it, kind of give you my observations, my opinions, and kind of we have a discussion. So feel free to chat with me and join in. And you know, I love chat. I like having engagement and being engaged. I think that's always so much fun. So, but before we do that, before we get into this, let's just talk about the weekend. I don't know about you guys, but it was fun. We were very busy. Let me know in the comments what you guys have been up to, like what you guys did for the 4th of July. Like, what did you guys get into? Did you guys go to any kind of good fireworks shows and all that kind of stuff? And I'll tell you a little bit about what I did. So typically what we normally would do is 4th of July, we always run a 10K. We've done it now. And as a matter of fact, I went back and looked at the years. We've actually done this 10K for 10 years. And we do it as a whole family usually. Now, sometimes one might sit out to not run, but we're all there. So regardless, we're all there. So this 4th of July was no different. We did do that. And then we would typically do fireworks at our church and that kind of stuff that same day. But our church ended up moving our fireworks to the 3rd instead of the 4th. So we had our 4th of July picnic fireworks on the 3rd. So we set that up. And normally my friend and I and a few others do all the fireworks. We set it all up. We love, I like blowing things up with fireworks. I like, all the math that's involved in setting them up and the strategic, process of getting it to time with the music and all that. I just love that kind of stuff. So my Friday, since we were off on Friday, I went over to the church at 3:00. Heat is obviously blaring. We spent all afternoon setting that the whole fireworks show up, getting everything wired and everything ready to go. Then the picnic starts, and right around 9:00 when we were going to get the fireworks off, this storm blew in. It didn't rain, but the wind picked up crazy. We're kind of close to some neighborhoods, so the pastors have kind of said it's probably not a good idea to let them off, which is the right call. It was very windy. It could cause major problems, so we were not able to do our fireworks show. So it's really kind of bummed. But we're gonna just store them over the next year and then have a bigger show next year. So that's kind of cool. And then Saturday, we woke up real early. I mean, we got up at 4, headed up to a race about 2 hours away, raced that as a family and a bunch of friends, had a great time. Bobby, thanks for being here, buddy. I know you probably were doing some kind of race as well. I almost guarantee it, Bobby. But yeah, so it was a good day. We did that and then had church Sunday. Some family came in and we just kind of hung out. So it was actually a really good weekend, even though we didn't get to see many fireworks. It was still a really good time. So let me know if you guys had any good things to say about 4th of July. And then now the last thing I'll talk about, and then we'll jump into the show. This has nothing to do with real estate, guys. It's just something I'm watching, and maybe you guys are watching this too. I would say more than ever, people are watching the World Cup, especially in the USA. I think we've not really been traditionally big soccer fans over here in the States. But because US is doing so well, and we are also one of the host nations, I think it's just kind of had this big surge. I have been watching it. So tonight at 8 p.m., USA is going up against Belgium. And then at 3:00 today, Portugal and Spain are playing. So the winner of that game, if we win against Belgium, we'll play them in the next round. So it's just kind of cool. So this is just kind of looking, so you can kind of see what this is. So right now, France and Morocco moved on. We've got today, we got Portugal and Spain, like I said, playing at 3. We'll see what happens in that next bracket. Then USA and Belgium. So that'll bring us into the 16 teams. Brazil, this is the crazy thing, okay? Brazil lost to Norway. They lost to Norway. And there's to be honest, I know you guys might not care about this because this is a real estate show, but look, the crazy thing here is like Brazil lost because of a guy that goes by the name Viking Android. And like, just Google this guy. This guy looks intimidating, and he scored all the points. And I mean, he's a beast. And anyway, it was cool watching him. If that dude was chasing me, I'd be running the other direction. Let's just say. So, but yeah, Brazil is out. Then last night, England beats Mexico. So 2 of your top teams that were really good are now out. And both of these South American type teams, Brazil and Mexico, and them are eliminated and by European teams. So pretty wild. Bobby, no race, but did 81.5-mile group ride and fireworks on levy for my 4th. Oh man, you almost did a century, man. You're close. 81.5 miles, man. Nicely done. That's good. So but yeah, and then we have the next game tomorrow, which will be the one to watch, is going to be Argentina, which is Lionel Messi, right? You know, he's just a phenomenal player. They're going up against Egypt, probably should advance. Then tomorrow afternoon, you have Switzerland against Colombia, and after you do that, now you're down to the final 16. That's the final 16 teams, and we'll just see what happens. I mean, eight teams. Sorry, we're on the 16. You have the 8, the quarterfinals. What am I saying? And then you have the semifinals, and then you jump into the finals. So I mean, USA is doing crazy well in this. Crazy well. All right. That's enough about soccer. I don't know if you guys are watching it, but there you go. It's what I'm doing right now. I have never watched soccer. I said this last week on the live stream. I was like, I've never really been into soccer. All of a sudden now I'm watching it. I find it very fascinating. I'm learning everything about it. When I traveled overseas, it's all they were talking about a few weeks ago, and I was like, man, if I want to relate to people, I need to know how to talk this lingo. So I began researching soccer. And I found it extremely fascinating. I'm beginning to figure out the strategy of it and all that. All right, let me tell you what we're going to be talking about today. So today, the first thing I'll talk about before we jump into the actual show is mortgage rates. Then we'll get into the actual show and the articles I'm going to be going over. The first one is going to be by Yahoo Finance. It says researchers warn the U.S. is barreling toward building 3 million homes too many, creating clear winners and losers. We're going to talk about that. There's articles like this. It's just so funny, and I will mention this probably again, but it's always so funny to me. Like, you have one article that says we have this massive housing shortage, and we need houses, and then before all the houses are even built, now we've got articles saying, like, researchers are warning that we're barreling towards 3 million homes too many. It's just, it's just so funny. I mean, this is why reading news and like in context with actual data, and then over and over every day, you can kind of begin to see some patterns on what's going on, and you just become much better informed. I'm not saying they're wrong. I'm just also saying that there's a lot of hype in this, and it's just crazy. The next article we'll just briefly kind of touch on is Trump says landmark housing bill is fine, and hence he will not veto it. To update you on that, there was a landmark housing bill that was passed and was put on the president's desk. He did not sign it. Look, this is political posturing at its finest. There's measures in that bill that President Trump just does not like. But plain and simple, he doesn't like it. He wants some U.S. voting regulations inside of that bill. So he does not want to sign that bill. He's not vetoed it, but he's doing some posturing here. It was a bipartisan bill that was supported and it went through. But anyway, this article is talking about him and his opinion on that. And to be honest, in my personal opinion, it's going to pass. It's just, this is like what politicians do. They play these little weird games. So we'll just kind of give you a quick update on that. Then the next article will be buyers face major decision with mortgage rate news. And it says, as the 30-year mortgage rate ticks down, should you buy or wait? So we'll talk about that, kind of what it is going on with the mortgage rates and what we're looking at and what might happen in the near future in regards to mortgage rates. So we'll see what happens. Then we'll jump into an article. And this one we're going to dissect a little bit. And it says, NAR, the National Association of Realtor, two MLSs, help us protect the Realtor brand. Okay, so we're going to talk about, and this is more specifically about the Realtor trademark. Okay, like how we use the word Realtor and what we are allowed to do and not do. So very relevant conversation because of what they're saying they're going to start doing. So I'm going to give you my opinion on this. I'm going to give my observation, my opinion on this. Okay. And then we will end. If we have enough time, we'll see what happens. Five brutal real estate truths I wish someone shared with me sooner. And this was by Jimmy Burgess on Inman. So that is the lineup today. That's what we're going to be talking about. Just so you know, what I do here too is I try to live stream Monday through Thursday, 8:30 a.m. Eastern time. Now, my priority is my job. So just know I do this because I enjoy it, and when I have time for it, I do it. And I love having people come involved, but sometimes I miss some, and that's because I have meetings and things I got to do, and that's just nature of life. I'm not an influencer. I am a guy that is involved in real estate brokeraging and doing that kind of stuff and running brokerages, and that's my priority. So the reality is I come on here because I have time. I'll read the news anyway, so it's great. So bear with me if sometimes you might hear in the morning, like last week, I said, hey, no live stream today. Just couldn't do it. Things came up, couldn't live stream. So, but my goal is Monday through Thursday, 8:30 a.m. Eastern time, because that's normally when I sit down for about 30 minutes to an hour, reading the real estate news, getting informed about what's going on in this industry specifically. So I just do this when I have time. So there you go. All right. The reason why I mentioned that, I had some people in the comments say, you lie. You said you do it Monday through Thursday. Like, guys, like, I mean, I understand it's called scheduling. It sometimes doesn't work out. All right. Before we go, let me talk about interest rates, because this will be relevant for the later conversation, and then we'll get started with the actual show. So interest rates have been just kind of weird. Just, you know, like right now we're sitting at 6.60. There was a slight dip, and it was in certain areas, and certain banks were doing certain deals and that kind of stuff. But it dropped down to like 6.47 for just like a day or two. So it dropped down, and it came right after the news of the Iranian deal, and the oil barrels went down in cost and all that. So then it dropped down. So right now, though, 30-year fixed rate, and this is today. This is based, I think, Matt, well, let's see. It probably updated like Friday, if I had to guess. Oh, no, is the second. Last updated on the 2nd. So it's running a few days behind. So, but just know, this is currently kind of what it's showing. 30-year fixed rate is 6.60. 15-year fixed, 6.17, 30-year jumbo, 6.77. And then you got 30-year FHA, 6.17, and VA, 6.19. We are really close to getting that down to about 6% for the FHA and VA. Now, I'm just kind of curious, because I know I read this report. I'm going to see if there is another statistic, because I know it dropped down, and that was running a little bit behind. So let's see. Mortgage rates. Here we go. Freddie Mac. Yeah, this is so Freddie Mac, and this is where sometimes, you know, Mortgage News Daily is like a quick, easy way to like get kind of a quick update, but it sometimes lags behind. So sometimes you can go to other sources and see where we're kind of landing. And this is where some models are showing, right? And again, remember, there's a whole video I did on the Fed rate, how the Fed rate correlates with interest rates and how that all works. You can go back and check out that live stream. I think I've even segmented it off into its own video. You can go back and watch that, because banks and stuff have a little bit of fluctuations there in setting their interest rate. And so there's a little bit of a disparity between what the current rate is, because you have to shop around. Freddie Mac is saying 30-year fixed rate 6.43. Okay, if that's the case, if this is the case, that would put FHA and VA loans below 6, right? So just keep that in mind. So tell your buyers and stuff to go shop around, because right now, if this is where we can get interest rates at, and this is where they can get it at, it's the lowest it's been in probably 7-8 weeks or so. So just, you can go with that and do what you want with that. Okay. All right. That's where we're sitting at right now. That's what's going on. I do that at the very beginning of the week, just so we do that, and I'll do it again at the end of the week just to see what's happened. All right, guys, let's go ahead and actually jump into today's show. And guys, and just as a reminder, if I'm going through these news articles, remember, this is a live stream. You can stop me and ask questions. You can give your observations. You can engage, all that. It doesn't matter if you do or don't, but you're welcome to do that. I will stop what I'm talking about, engage with your questions or your comments, and we'll do this all together, because I value what you guys have to say too. So feel free to do that. Feel free to chime in. All right, let's get started. Welcome to the Real Estate Brief. I'm Adam. Today we're cutting through the noise. We're going to get to the truth in the news, look at the data, and I'll give you some of my observations and where I believe you can find opportunity. So if you're ready to gain your real estate edge, let's dive into our very first story. And the first story that we're going to be diving into today is in regards to basically the prediction that there's going to be too many homes being built. Okay. And it's basically making the argument that the USA is barreling towards some kind of massive tsunami of too many homes, millions of homes, too many on the market. And this is coming from Yahoo Finance, which is actually their MoneyWise division. And they're reporting this, and Kit Pulliam is making this article. So let's go ahead and just read through this, and let's just talk through these numbers and just really think about this and what's actually going on here. It says we're currently in a housing shortage. Let's just take note. That's true. We don't have enough houses on the market. So we're talking about millions being too overbuilt right now. That's what this whole article is about. But a white paper, and this is true, a white paper published in June by the Mortgage Bankers Association says we might be overcorrecting. It estimates that by 2045, we could be building 3 million homes too many, leading to a seller's market. Okay, that's the prediction. And remember, this is economists making data models and making some predictions. So this is where, this kind of information could be helpful. It could help us to understand that maybe what we're doing is too much. But the reality is, for months, if not over a year, we've been talking about how big of a shortage we are. So to immediately go, and this is just where I'm going to immediately just kind of say, cool the jets, because to go in here and say in 2045, we're going to be overcorrecting, have this bigger problem, it's really hard, guys. If you go back right now and you look past the past 20 years and look and see how accurate we are in any model we do, because one of the biggest things that happened was COVID. We couldn't predict what happened during that time. So a lot can transpire in that amount of time. So we listen to these models, but we also have to understand that these are predictions. And we have to be careful. And the reality is we need homes. Like we all need homes. You realtors out there know you need homes. It says, can 20K be a good budget for a 3-bedroom apartment? Yeah. It depends on your market. If you're in LA or something like that, if you're looking to, are you talking about buying? I would assume 20,000 be a good budget. Not if you're trying to buy an apartment for 20,000. I don't think you'd find that. But if you're trying to rent, maybe there's I don't know what that is, 20,000. You're not going to buy much with 20,000. Just elaborate a little bit more there, IG Cat. Let me know what your kind of thoughts are there. All right. While affordability challenges remain significant, MBA's research highlights the importance of looking beyond today's market conditions. Well, that's true. Says MBA's Senior Vice President of Research and Business Development, Mike Frantantoni. These findings can help industry participants and policymakers better prepare for future changes in housing. To be clear, housing costs have been rising faster than inflation, likely caused by a nationwide housing shortage. Now, that's true if you're going back to the past few years, but that doesn't really hold much water if you look at it right now. The inflation has dropped. We're sitting in some models, in some areas, we're closer to 2% than we have been in many years. So I'm not sure exactly the argument there. Let's just read on. Brookings estimates there was a 4.9 million housing unit shortage in 2023, which that's a huge amount, while the National Low Income Housing Coalition estimated there was 7.2 million rental home shortage specifically for low-income residents. The white paper, though, says the U.S. will be facing a supply and demand mismatch over the next 2 decades. Here's what that could mean for you. So, and this is something I'll just kind of pause. This is one of the reasons I say reading a lot of different articles could be helpful. If I went to last week, Dr. Lawrence Yun, which is the National Association of Realtors economist, and he's been with them for many, many years. He actually predicted another model, and his model was one where home appreciation was going to hover around 2 to 3% for the next 5 years, and that within this generation that are buying now, by the time they go to retire, the average selling price right now is let's just say it's $400,000. I think he had a model of $398,000 was the average price across the nation. But if you were to take that model, and he said within the time that the people that are buying now and within 20, 30 years of retirement, the average purchase price of a home would be closer to $1 million. So if that's true, then this model saying 20 years, you might have an influx of too many homes. I think there's just a lot of data kind of maybe missing here. But we'll continue on because I think there's just different ways you can look at this, and this is just the way numbers work. You look at if you hone in on one direction and one specific thing, you could become clouded and focused only on that one model becoming the reality, and then you negate the entirety of what's actually happening here. And so we'll see. The white paper says millennials were largely the cause of post-financial crisis home demand, which was made worse by the COVID-19 pandemic, when more people were working from home and mortgage rates crashed down to historic low. This also caused home prices to rise. Since housing demand outpaced housing supply, the National Association of Home Builders reported that house prices increased by almost 55% nationwide from the first quarter of 2020 to the third quarter of 2025. So we still have affordability gap. It's still present. That's very true. But housing takes time to build. And this is the thing. For years, we've been trying to get homes to start being built. Guys, we've just started, kind of that momentum. That momentum has literally just started. I just feel like this is a little bit of reach. The white paper says pandemic-driven projects started to be delivered in 23 to 25, right when mortgage rates started to climb back up and buyers weren't as motivated to lock in a good rate. The white paper also points to other demographic shifts that could lessen demand over the next few years. Fertility rates have been trending down in the U.S., it says. That combined with a legislative-driven restriction on immigration could cause housing demand to go down. The paper relies on housing demand projections from the Joint Center for Housing Studies to inform its estimation for the number of new housing units needed by 2045, which it puts at a little over 19 million. For context, the paper estimates housing supply will go up by a little over 18.5 million on the low end and slightly lower than demand, to a little over 26.5 million on the high end, significantly above demand. Its midpoint puts new housing supply at 22.8, around 3 million units over its projected demand. Guys, this is where sometimes data can create a lack of clarity. When you read things like this, and most people would do this, they're not going to read this article. Most people are not even going to take their time probably to even read this, because if you're not in real estate, you probably don't care as much. If you're not an investor in real estate, you're not going to care as much. So the people that read this headline itself are going to make conclusions that could come out to be completely wrong, that could actually cause what they're talking about to happen. And there's, again, when you take 20 years and you make any kind of projection in the real estate industry 20 years out, man, I think you're just reaching. And I understand they have the white paper and the Mortgage Association has put this out, and I understand there are some indicators that could cause that to happen. But to make any kind of definitive solution to this, my conclusion would be, guys, if you're building, keep building. Like, we need homes. Like, there's still a major shortage there, and that still needs to be the talk. Now, it doesn't mean that we don't pay attention and make correction. And in some ways, I understand that's what this article might be trying to do. But in some ways, it's like, man, that 20-year spread is just kind of crazy. The new housing estimates come from our anticipation of units added by vacancy and second homes versus net adds from excess supply from aging and the loss in existing inventory, said NBA Vice President of Communications. The supply and demand mismatch could be good news for buyers, but bad news for sellers. In a press release on the white paper, the NBA said it expected house prices to decrease if these projections were accurate. Well, yeah, I mean, they're already kind of doing that. I mean, if you have more supply out there, then prices are going to decrease. And the reality is, we're seeing already that a correction in the market where there's more of a stabilization happening anyway, where the homes where people thought they could get way more for their home has come back down to more of an even keel where it makes more sense, so the buyer's more willing to pay. So that's already kind of adjusted itself just a little bit. And we're seeing that more and more as every month goes by. And that's also one of the biggest reasons why that actually happens is agents and sellers get better at pricing properties because we have more data to go on. Anytime you have a big shift, it's really hard to pinpoint a purchase price or a selling price. You just don't have the data to, verify that's what it's going to go for. So you're making a lot of assumptions and guessing, and that causes that to take some time to kind of adjust. And I think we're kind of getting past that just a little bit, where the prices are being more reasonable, where buyers are willing to pay. If residential construction remains elevated while household formation slows, housing supply growth could outpace demand growth in some markets, placing downward pressure on home prices. This is good news for buyers and renters who could finally see income increases outstrip housing price increases. Of course, it's not as good news for people hoping to sell or rent their houses in the next 2 decades, who may not see the return on investment they expected when they bought. Again, all of this is true if you are looking through the lens of now. If I looked at everything now, I could say, well, yeah, this makes kind of sense if I logistically look at this and I understand the data. But the nuances inside of everything, man, a lot can happen. A lot can happen. It's hard to know how housing price decreases could impact the economy at large. It could cause panic selling and deflate local and state tax revenue, but it will also likely help alleviate increasingly hefty costs of living increases for low-income Americans. Yeah, I mean, look, again, it is what it is. Good morning, Kevin. Thank you for being here, my friend. Thanks for tuning in. But the reason why I'm sharing this article, okay, because there are always these crazy headlines. Headlines will run and they'll make statements. And when you read just the headline, it says, researchers warn the U.S. is barreling toward building 3 million homes too many, creating clear winners and losers. That headline is just, it's clickbait. And this is where the consumer is going to read. This is a consumer-facing website. And now all of a sudden we're talking about having too many homes and it doesn't give the context. I mean, why does it say this? Researchers warn that by 2045, we could have 3 million homes too many. That's a better understanding and clarity that just says, look, this is an observation, something that we should be mindful of and be aware of when we're making policies and when we're building and when we're doing certain things, more informative. And that's where I would put it. It's like, yeah, we should read these things. We should be informed. We should understand that, yeah, well, we could overbuild, right? In the next 10, 15 years, we could overbuild. But the reality is right now, we're still trying to build back. Like we are still trying to get this real estate market to adjust, and we have a housing shortage. So that needs to be more in this article. So I just say all that to say, like, look, articles and headlines can be kind of crazy. They can just, it's clickbait, and this can be misleading to the consumer, and we need to be better at just kind of keeping our tabs on what's going on. All right. Let's go ahead and jump in real quick to this next one here. This is the Trump says landmark housing bill is fine, and hence he will not veto it. Doesn't say he'll sign it, but not veto it. So this was a bipartisan bill. It was a bipartisan affordable housing bill that all parties liked, passed, and now it was sitting on the presidential desk for him to sign a couple weeks ago on a Wednesday. And he said he's not signing it. He even made some rhetorical comments like it's meh, it's a big yawn, all those type of things. And this is where, again, we need to be kind of mindful on the way politics works, the way our government functions, and not be pawns in any kind of narrative. What we understand is this: midterms are coming. Trump's not running again. Okay, this is it. So he has nothing to lose, and he is going to do whatever posturing he can. The Republicans understand that it's midterms and they need a win, so they voted this bill through. That it was bipartisan. It has a lot of good things in it. Nothing that's going to drastically change the real estate market, overnight or anything crazy, but just some reform that, to be honest, needed to happen. But Trump is not going to miss the opportunity to make it into some kind of political positioning for himself or his party. It's just what politics do. Notice he's not vetoed it. He just has not signed it. And it'll get into that. If he doesn't veto it or he doesn't challenge it or anything like that, it'll just become law, I think, next week. Maybe longer. I can't remember. I think it's about July 10th or something like that. Anyway, once that happens, it will become law. So then he can just kind of stay neutral. And it's only because there's another bill that I think it was like Save America Act or something like that had a lot of this kind of stuff in it, but it also talked about voting rights and things like that, some of the things that he campaigned on. So he would rather sign that one. But of course, Republicans, everybody telling him, like, it's never going to get through to your desk. It's dead on arrival. Like, it's a waste of time. But he can still posture that way. So that's what we're looking at here. He has not vetoed it. He's playing a political game. This is what they always do. He doesn't want to sign a bill that doesn't fit his narrative or whatever. But he hasn't vetoed it. So most of it, everybody's kind of in agreement. It's going to pass. This is what's going to happen. Could he veto it? Yeah, they could then challenge it, and they could go into, all that. But the reality is he's not vetoed it. Okay, so let's just read the news. Let's stay informed and understand how politics work and then the real world, right? Because this is just politics at its finest. That is what's going on here. And let's just not be pawns. Let's not be pawns to the political makeup of all parties, right? I don't want to do that. All right, so let's go ahead and just kind of read through this. It says President Donald Trump has reiterated his preference for a voting ID bill over the landmark housing bill on his desk, while hinting that he will not use a veto to block the housing package. Okay, like I just said. The president refused to say whether he would sign the landmark 21st Century Road to Housing Act after he abruptly canceled its signing. But he softened on the actual bill, while stating that he wanted to see Congress take action on the voter ID bill, the Save America Act. Now, again, we got to step back and understand the strategy here. One, Trump's not running again. Two, Republicans, if they are wanting to win anything in the future, have got to pass some kind of legislation by the midterms to have some kind of win. So if Trump can look like this guy that is just obstinate and whatever, and I'm going to be strong, and then the Republican base can persuade him to allow it to come in, they look good. Trump could get a little bit of mud on his face, but then the Republican Party looks good because they were able to convince Trump to do whatever he needed to do. That could be what happens here, right? This is like the ultimate game of chess. We are the pawns when they start talking about legislation and all this kind of stuff, but the reality is it's not been vetoed. Trump says this: the housing bill is fine. Trump told CNBC on Thursday. Notice last time he said it's just a big yawn. Now it's fine, right? This is like a, kind of the game. There's a lot of Democrat points in there, and I don't think they're good, but it's fine. I've made the case, right? I'd rather not sign anything until we sign the Save American Act. There's his position. It says, as long as Trump does not use his veto power, the housing bill will automatically become law by July 10th, which will mark 10 days since House Speaker Mike Johnson officially submitted it to the Oval Office. However, even a veto could be overturned by the super majorities that back the bill in the House and Senate, making eventual passage likely. Trump can play the political game, doesn't have to do anything, it could still become law, okay? That's the point. Domino, good morning. Thank you for being here. You caught Mitch. Yeah, you got a little earlier today. That's good. The House passed the bill in a 358-32 vote last week, one day after the Senate easily. We know what happened. They include constraints on institutional investors in the housing market, new banking rules aimed at promoting mortgage lending, and measures to cut red tape and speed up home building. But just as the two parties were hailing the bill as an act of bipartisanship to cut housing costs, Trump suddenly canceled the signing ceremony on Wednesday. Big deal, it's a yawn, he said of the bill a few days later. To me, compared to the Save American Act, just about everything is a big yawn. Yeah, LOL. Yeah, I know. You made it in. That's all matters, right? What's in the 21st Century Road to Housing Act? The final version of the bill includes 45 provisions across 381 pages with major implications for housing. And there's a lot in here, guys. I did a live stream on this. We talked about it. Realtor.com economists estimate that the country has a shortage of more than okay, this is the part that just cracks me up. Okay. We remember the article we just talked about, right? Having by 2045, we're going to overbuild and whatever. Realtor.com economists estimate that the country has a shortage of more than 4 million homes as a consequence of more than a decade of building fewer homes than were needed to meet demand. So let's talk about overbuilding already, right? Jeez. Among other things, the legislation aims to incentivize home building by establishing policy guidelines and best practices, streamlining environmental review, and improving existing programs, including tying community development block grants to housing outcomes, says Realtor.com chief economist Daniel Hale. This last provision enables the federal government to put its finger on the scales of policymaking at the state and local level, where many of the policy and regulatory hurdles to home building exist. So it kind of cuts through some of the red tape, giving a little bit more of a clear path to getting some of this kind of stuff deregulated and through the door. The legislation also makes changes to make it easier to build and finance both manufactured and modular homes, which could bring down construction costs if used more widely. Key provisions of the bill include the following: restricting corporate buyers, blocks Wall Street firms and large institutional investors from mass purchasing single-family homes, backing the ban with steep financial penalties. Now, a lot of people have argued against this one because it's like they'd say like, oh, it's just a very small percentage of people this affects. Yeah, but the thing is that those that it does affect, it affects them greatly. And just because something is a small amount of a percentage doesn't mean you don't address it, right? You still should do something. This next one has caused a little bit more division. Zoning reform creates a $200 million grant program to reward cities that eliminate restrictive zoning, while penalizing slow growth communities by cutting their community development block grant funding by 10%. Now, this has been contested a little bit now that the bill is kind of being read through. And the reason why, and there's an argument that kind of makes sense. Hold on, I'm going to sneeze, sorry. The reason why this actually makes sense for the argument on both sides is zoning traditionally has been done at a very local level, and rightfully so. Zoning has a major purpose in protecting everybody in certain blocks in certain regions from different types of developments entering in. So zoning, it can be a really good thing, but then the flip side is it can be so regulated that it stampers growth in a community. So it's a very touchy issue. So some people raise the concern that the federal government entering into the argument of doing zoning reform takes pressure and puts it onto local municipalities to make adjustments or to gain money or face a penalty for not doing so. And so some people argue and say, well, yeah, but this could cause some major deregulation of zoning and cause different things to happen in communities that erode the value of that community. An argument can be had either or. I think there does need to be some reform there because there is way too much red tape. If you go into most areas and you try to get through zoning or try to rezone something, it can be very, very difficult. So with something like this, I think some reform needs to happen. And sometimes, guys, this is the thing. Sometimes you got to blow stuff up and then put it back together for it to be better than do nothing. And this could be one of those type of reforms, right? It might be throw this in here, let the dust settle, see what happens, blow things up, and then come back and revisit this. That could be a case. It says cutting regulatory red tape. Accelerates construction timelines by waiving lengthy NEPA environmental reviews for low-impact HUD projects and streamlining repetitive property inspections. So again, cutting through some of the tape. Isn't it funny? We just read an article about overbuilding, and this bill is addressing how we're underbuilt. Right? This is where we're really at right now. This is where we sit. It is not time. We can be aware of it, but it is not time to be worrying about overbuilding too much. Like let's start the building process, and 5-10 years from now, let's reassess. But like right now, we have a shortage of homes. Everybody watching knows that we have a shortage. Like there's just not enough homes on the market. All right, expanding mortgage access launches a HUD pilot program to expand access to small dollar mortgages below $100,000 and increases the amount of private bank capital that can be invested in local affordable housing. Modernizing factory-built housing. This is kind of a big one. Updates FHA lending standards and draw schedules to give manufactured and modular housing financing parity with traditional site-built homes. It's clearing some of the red tape to give the mortgage industry a little bit more leniency to be able to make loans on homes, FHA especially. So these modular homes can be more financed, the way that they're read, the way they're interpreted, like chassis versus wheels and all that kind of stuff. It's going to help, open that up just a little bit. Disaster recovery fixes permanently authorizes the Community Development Block Grant Disaster Recovery Framework for faster post-disaster rebuilding. So just a little bit of that kind of stuff going on as well. So, and that's just a few, guys. There are so many things inside this bill. It is a massive, massive bill directly aimed at the real estate industry. And here's the thing, I'm not spending a whole lot of time breaking this whole bill down because it's not a law yet. I mean, we can read it and be all excited or not excited or argue about it. Right now, we're still waiting. If Trump does not veto it by July 10th, it becomes law, right? It passes. And if that happens, then let's go into we're going to dissect this thing, and then you can start making some projections and kind of thinking through it. We'll talk about it because there is a lot in it. There is a lot in it. And I know there's going to be a lot of conversations about it once it does pass. It's going to be a big conversation. It's not going to be drastic changes immediately. It's going to be subtle over time. Nothing is massively drastic, but it does address things that need to be addressed. And I will add, it was overwhelmingly supported by the National Association of Realtors. Overwhelmingly. So, all right. All right, let me go in the comments, guys. What you guys think so far? Right now, it's been just kind of a lot about the market and what's going on. That's just what Mondays are. Okay? That's what Mondays are. Hopefully, it's helpful, though. The whole point, guys, is to educate and learn and stay informed. All right, let's go jump into this next one. This next one is talking about mortgage rates and kind of what's going on there. And the title is Americans Face Major Decision with Mortgage Rate News. As the 30-year mortgage rate ticks down, should you buy or wait? This is always that tension. Like, man, the interest rate dropped down. Should I go ahead and buy? Or should I refinance? And you're doing all this kind of stuff back and forth. And it's because that the reason why is an interest rate number is like a number that you can just watch and then have a conversation about. There are so many more moving parts to real estate than the interest rate, guys. Like, I mean, what you currently live in versus buying, what that looks like. Is it cheaper for you to buy even with the interest rate what it is? Is there improvements you can make to that house? You know, there's so many different factors. Dominio, Dominio says, yeah, but who cares what NER thinks? They are the worst. Yeah, so here's the thing. There's like, man, it's like, how do I handle National Association of Realtors? I want to handle very politely. They take 2 or 3 steps forward. They take 5, 6 back. I mean, they are fighting against themselves. And I'm not against them. I'm saying they still are very relevant. The next one we're going to be talking about is this very thing. And I'm going to get into this whole thing here in just a second. But Dominio, you're right. There is this major tension between us and them sometimes. And the part of their of what NAR does that I appreciate is their legislative RPAC and what they do by lobbying and kind of keeping the homeowner in the front and center. I think that if they would just lean in there, if that would be their lane, it would be so good. It would be so good. Like really, that right there is the biggest benefit as far as like where we're at currently. And given too, I still the MLS and things like that, very valuable. There needs to be reform there as well. Like there needs to be changes there as well. Okay, that's all true. It's all very true. It's just a difficult thing. I mean, I would love to sit here and just say the National Association of Realtors is just my biggest champion, biggest friend, you know, that kind of stuff, and housing industry and this kind of stuff. But there's this weird tension thing that's always kind of going on. And the next article, we're kind of going to talk about that actually. I think it's just tough. Domino says they just don't look out for us. They are busy with the realtor trademark. Okay, so that's interesting you bring that up because that's what we're going to be talking about. That is exactly where I'm going. That's exactly the article we're going to be talking about. So yeah, hang tight. We're going to be talking about that. All right. So here's the next article here. This one right here is by thestreet.com, which let me just add, thestreet.com is actually an entity of Zillow. Just FYI, it's just a news aggregate though. So I do read some of their articles and stuff like that. I'm not fully against Zillow. I think that some of their practices, I wish they would change some of they need reform too. I think all these industries need reform. Tracy, 100. Yeah. Thank you, Tracy. All right. Americans face major decision with mortgage rate news. I don't know. I mean, I kind of reposition this. This is another thing. And this tells you everything. Like, look at all these ads. Oh my gosh. I can't even see the text. All right, let me shrink this down so I can actually get it on screen. There we go. My goodness. All right. It says mortgage rates have decreased according to Freddie Mac. The average 30-year fixed rate mortgage rate is down 6 points to 6.43, which we talked about at the very beginning. A 7-week low. The average 15-year FRM has declined by 5 basis points to 5.79. I may not be buying a home right now, but as a real estate journalist, I took a huge sigh of relief along with all the hopeful home buyers out there when I saw that rates had fallen. It's encouraging to finally be able to report on good news for rates and affordability. So now that the popular 30-year mortgage rate has inched farther away from 6.5, what should potential buyers do next? Wait for rates to continue falling or get the ball rolling on your home buying journey. So this is the premise. This is where we're setting the stage for this article. Mortgage rates respond to Iran war and Federal Reserve. And this is where we're at. The U.S. and Iran are making progress toward a peace agreement. We'll see. I pray it does. We'll see. And oil prices have decreased over the last week. Brent crude oil now sits at just a little over $70 per Business Insider. Because I've been tracking mortgage rates since the conflict in the Middle East began in late February, and long before that in my career, I knew these improvements could be good news for mortgage rates. I still wasn't convinced that rates would decrease the week of July 3rd, though. Why? Because of the Federal Reserve. I would actually agree with that sentiment. I didn't expect too much to happen. After the June 16th through 17th FOMC meeting, many experts predicted a federal funds rate hike was in the Fed's near future, not a cut. Now, when I was reading the FOMC report, that those dates back in June, mid-June, I actually made this statement. I said, I don't think there's going to be a cut. They're going to hold closer to the 6.5. And the reason why, it's actually very easy to understand what they do. Like if you're on that board, and again, I did a whole breakdown of how the Fed rate and all that kind of stuff correlates to mortgage rates. It was a deep dive into that. And here's the thing is their main concern is the inflation number, like that appreciation month over month. They're looking for that 2% metric. And the closer we are to that, if we go under 2%, the more likely the interest rates are to go down. So we're sitting really close to that. So I'm not too surprised that we dropped a little bit. I mean, yay, I am excited about it. I'm good with that. Obviously, I think that's great. But at the same time, I'm not surprised that happened at all because, again, they're watching that rate. That's what they're looking at. Sentiment about the Federal Reserve was one reason Freddie Mac mortgage rates remained flat the week of June 25th. I also monitor daily rate changes from Mortgage News Daily. That's what I watch all the time. These were volatile throughout the week, which made me a little nervous. I was cautiously optimistic, but fully prepared for rates to be stagnant again the week of July 3rd. Blah, blah, blah. Let's get on. Will mortgage rates continue to decrease? Home buyers have seen mortgage rates tick down here and there in 2026, only to pop back up again a week or two later. Even though we're all happy that mortgage rates have decreased, the big question is, will mortgage rates continue to go down? Will they fall closer to 6? Now that the U.S. is moving toward peace with Iran and the market is taking the Fed's attitude in stride, DeGarian said the main thing to watch is news regarding jobs. In general, mortgage rates tend to decline when jobs data is weaker. That's true, and that's why the inflation rate changes. That's why the appreciation rate changes. People buying homes and not buying homes, that kind of stuff. That's the number, guys. It's the number. The June jobs report released by the Bureau of Labor Statistics on July 2nd showed that payrolls came in well under projections. The revised data for April and May also lowered the number of jobs on record. Private payrolls increased by 98,000. That's the thing is the private payroll actually went up. So more people went into the private sector than they were in the corporate world. So that's kind of why those numbers have went down in one arena but went up in another. So that's very relevant actually. Another topic though. June, according to the ADP National Employment Report released on July 1st, this number is also lower than expected. If jobs data continues to weaken, mortgage rates could keep trending downward, at least for a few weeks. Beyond that, it's hard to say what rates will do. The next Federal Reserve meeting is in July 28th to 29th, although experts don't predict that the Fed will hike its rate in July. The reality, guys, if they do anything, we're talking about a 0.15, 0.2 at the most, right? I mean, these are micro changes. Nothing drastic's really going on here. I mean, it's like you can drop the rate like this, and then all of a sudden all the news articles go crazy, and you get this spur of activity and stuff. But again, it's not a huge drop. My prediction is we could get down to 6. I don't think so. I think this year we're going to ride out close to the 6.5 mark, and that's going to be the day. The whole really big goal here is just to bring stability to the mentality of the consumer. And the longer you can hold a rate at a certain rate with some minor fluctuations one way or the other is overall usually a good thing. And so I feel like that's what's going to happen. For home buyers, the summer may be shaping up to be better than expected, said Gurian. Now, with oil lower and rates beginning to ease, there is a better chance that we could see rates move toward the lower 6% range if the jobs data softens. This leads to another classic question when mortgage rates decrease. Should you buy now while rates are down, or should you wait for them to fall even more significantly? I'm just going to simply say this. Why gamble? Like, I mean, we're not talking about like a tangible depreciating item, right? I'm not talking about like going out and buying a car here. We're talking real estate, guys. Like if we're sitting here playing the interest rate game, we are missing every other quantifier that tells you should be buying a home. Like if all you're doing is watching the interest rate, you're missing out on all the other opportunities and benefits that home ownership provides you. And that is you begin to build equity. Going back to what I said about Dr. Lawrence Yun and his prediction that if those that are buy now, 30 years from now, the average purchase price might be $1 million. If we're sitting at $400,000 as the average purchase price, in 30 years, it's over $1 million. Where can you build that kind of wealth? Where? So why are we focused on interest rates? Like if you can go out and buy a home right now and it's in your budget to do so based on whatever the interest rate is, okay? Like if it's 6.5 or 6.7, if you can afford the house you want to build and live your family and build your family in there, buy it. Don't play this game of like waiting and not waiting and all this kind of stuff. Get into the weeds about monitoring the interest rate, what you do. I mean, I understand like if it goes to double digits, that kind of stuff, obviously there's some things, but right now, go buy a house. Like if you can afford a house, go buy it, start building wealth, because guess what? You have leverage. You can change the house. You can do additions on the house. You can improve the house. You can also, guess what? Refinance. If the rate drops too crazy, you can refinance. So anyway, that's my opinion. Like this whole article is all about interest rates and that kind of stuff. But look, it's real estate. It's the most leveraged. I'm not going to put it into asset unless you're an investor. If you're an investor and you're making money off that property and it's profitable, you can call it an asset. If you're just living in the house, it's currently a liability that will become an asset or could be an asset when you go to sell it. Okay, so those are different line items when it comes to understanding money. Tips for home buyers now that rates are down. For home buyers, okay, wait, sorry. Don't wait for lower rates to buy. Deshaun's World made a comment. Jesus Christ loves you that he died on the cross for our sins. Jesus is the way, the truth, and life. Amen. Thanks for posting that. I would agree. Don't wait for lower rates to buy. Timing the real estate market is risky. Amen. And it rarely works out the way you want. Experts make their best predictions about what mortgage rates will do next, but economic or political circumstances can change unexpectedly. There's no guarantee that rates will continue to decrease or increase or anything. Begin the home buying process. If you're otherwise ready to buy, start shopping for houses now. If interest rates do go down, they could be even lower by the time you're ready to lock in a rate. Look into a rate float down program. Some mortgage lenders let you lock in your rate for a certain amount of time, usually 30 or 60 days, but with the option of a rate float down. And this is true. Talk to your mortgage provider and ask them if they have this as an option. In other words, where you can lock in the rate as you shop around and try to buy. And then if the market does adjust whatever, they can adjust your rate. If market rates decrease before your lock-in rate expires, you can ask your lender for a lower rate in exchange for a fee. This does happen. There's a lot of people who do this. Navy Federal Credit Union and New Res are two lenders offering this type of program. And there's many out there. I would just talk to your lender and see if they offer that. And shop around, guys. Every mortgage lender has some creative opportunity to be able to do certain things. So it's very good. All right. That gives you an idea of the market, the economy, everything that's kind of going on. Not the most exciting topic, guys. I mean, I get it. These type of things are kind of boring sometimes, but it's so relevant. If you want to be able to articulate what the market's doing, you got to just get in the weeds here a little bit. You got to do what you don't enjoy. And I kind of like this kind of stuff, but I also understand that it can be monotonous. And a lot of the stuff we've been talking about today is kind of that way. So with that being said, the topic that Domino was talking about, right? They just don't look out for us. They're busy with the realtor trademark, right? That's what we're talking about next. And I'm going to set just the stage here for just a second. And I want this to be very clear. I am in no way saying that protecting a trademark is important. It is. Protecting a brand is important. You should do that. You should strive to protect those things. But timing is important as well. NAR, yeah, the NAR, yeah, you're right. That's exactly what we're going to be talking about. So let's talk about this, guys. So the National Association of Realtors is issuing a strict, and I'm not going to use the word ultimatum, but it kind of feels that way. It's almost like do it or otherwise to their own realtor base to basically protect the realtor trademark or risk losing structural integrity. Now, there's 2 points here. One is we need to heed what they're saying. If you are a realtor, pay attention, because what they're saying they're going to do, we need to make sure we are compliant. But then the other thing that I will say is, why are we doing this now? Like, why are we picking out this battle now? Really? Like, National Association of Realtors, if you are listening, now is the time to be championing your agent base. That is what you should be doing. You should be coming alongside and really coming in there in the trenches and fighting for them. There has been, the past 5-6 years, all these buyer rep agreements, all these lawsuits. We've got these private listing things going on. There's an argument to be had on all sides. And we picked this fight. This is the fight we're going to pick. Blows my mind. All right. The real estate news. NAR to MLSs. Help us protect the realtor brand. An association attorney said NAR is stepping up trademark enforcement. We don't want realtor to become synonymous with real estate professional. Okay? Again, this is why I said there's two points here. One is, yes, trademarks matter. Okay? Holding the line, maintaining the integrity of a trademark is important. Okay? Because there's a lot of money invested in it. Me as a realtor, I do want my brand as being a realtor to be consistent. I don't want people misrepresenting it. I want it to be correct. I want the consumer to fully understand the differences between just being a real estate agent and being a realtor. I want all those things. But then the other side of it is, why now? Why are we doing this now? I mean, this has been going on for years. Why choose this now? Domino says, if they want to protect the realtor brand, they should have a minimum requirement of 20 homes sold before you can be a realtor. Well, that's an extreme position. I'll give you that. Basically, a track record of being, an outstanding real estate agent, knowing what you're doing, and then you can become a realtor. I mean, that would definitely do it. All right. Key points. NAR's Associate GC and VP of Legal Affairs and Brand Protection told MLS Forum attendees that the association is taking a more proactive approach to preserving its trademark. As part of its 7-stage brand protection strategy, NAR plans to leverage, listen, if you are a realtor, pay attention, guys, leverage AI platforms to help anticipate threats and prevent infringement before it starts. They're going to be watching. That's what they're saying. They're going to be watching how you use Realtor. In reference to the Realtor MLS logo, attendees were told that sporting a lapel pin with the logo is not proper use and advised to just put it into your pocket right now. This baffles me. I'm sorry. This is... Okay. Kleenex, escalator, aspirin. These are all examples of now generic terms that were once trademarks. At the Realtors legislative meetings last week, NAR trademark champion implored multiple listing service executives, don't let Realtor join their ranks. Yeah, Tracy, the poopy icon. Yeah, there you go. All right. Many of these words used to be amazing trademarks that companies spent hundreds and thousands, millions of dollars protecting. And now they are just part of the ordinary common vernacular. And we don't want that to happen. Leslie Nettleford Freeman, NER's Associate General Counsel and Vice President of Legal Affairs and Brand Protection told attendees at the event's MLS forum, "We don't want realtor to become synonymous with real estate professional." So let me ask you a question. When you hear Kleenex, escalator, and aspirin, in some ways, I feel like the trademark succeeded. Like, Kleenex is now the name of a tissue. So when someone says they need a tissue, they will say, "I need a Kleenex," which is the brand name. So when you're shopping or an ad is ran, they hear Kleenex. So tell me how Kleenex is hurt because it has become the term for a tissue. Anyway. We don't want that. All right. A realtor is a member of the National Association of Realtors, she told attendees, echoing the remarks of a colleague at NAR's Risk Management Issues Committee meeting who emphasized that realtor is not a job title or a credential, and it is not a license or a certification, and should not be used with words that attempt to distinguish between members of NAR such as top realtor. The MLS forum was closed to press, but Real Estate News was able to obtain a recording of the session. Yeah. Here's the battle in National Association of Realtors you should die on. This is the one that you should be focusing on right now. This is the problem that can come out of committees. Okay? Committees serve a purpose. But when they become so focused on their one topic of that committee, they end up saying things like this. They end up making this into this big issue that we have. Does all you guys out there that are realtors, what problem are we currently having with this? Like, does the consumer actually care? Like, are they going around saying, "Well, that's not a realtor, that's a real estate professional"? Are they even analyzing it? This is such an internal discussion. It's such an internal thing. Like, I get it. Consumer doesn't know the difference. We do. We understand that the National Association of Realtors helps us to operate at a higher standard. Okay? We adhere to a code of ethics. So if they are holding us to a code of ethics, guess what? We elevate ourselves by the way we deliver and the way we communicate to the consumer because we are realtors. It doesn't matter what we're called. The whole point is the realtor brand is for us. It's for us to be better at our jobs, to hold ourselves accountable, right? Tracy, how many folks in real life know any of this? That's right. That's exactly my point, Tracy. Exactly what I'm saying. Yes. Thank you, Tracy. You're exactly right. They are spending my money on this instead of offering free training. Yes. Domino said that. Yeah. It baffles me. All right, let's get on to this article. I've already over time. That's fine. I don't have a meeting for another few more minutes, so we're going to go longer on this one. I won't get to my last one, though. I didn't get to the last article, but this is important. I want the National Association of Realtors to quit doing this stuff. Like, can we get serious here and talk about stuff that actually matters? Like, guys, you need to be focused on rebranding yourself in the eyes of your membership base, of your realtors, right? Not this kind of stuff. Tracy, now they say, put it in our pocket. Yeah. All right. Moving to AI-powered proactive monitoring of the realtor brand. Guys, this is where it irks me. Nettleford Freeman, an intellectual property attorney, took the newly created position at NAR in July 2025. I'm really excited about how far we've come, she told attendees, noting that as a part of the association's 7-stage brand protection strategy, we need to read that. NAR just launched a cross-departmental brand protection team. It sounds like a police force, man. And that allows us to really embed the businesses into our strategy. We started out with the foundation and awareness of the realtor brand And we have moved from reactive enforcement to proactive monitoring, which I'm really happy about. Let me let TikTok know I'm still here. Okay. We started out with the foundation and awareness of the Realtor brand. And we have moved from reactive enforcement. In other words, when someone would report somebody else and they had to take action, we've now moved into a proactive monitoring. If I was to say what this is, foundation awareness of the Realtor brand, this is police force. I mean, it's crazy to me. NAR is now moving toward automated and scalable enforcement, according to Nettleford Freeman. Quote, okay, quote, we're going to be using AI-powered platforms in order to increase automation, and ultimately we want to be poised to anticipate threats and prevent infringement before it starts. Remember, I began this article with two positions. One is trademarks are important. I don't say they're wrong there. They are important. The problem is, though, why now? Why are we doing this now? There are bigger fights. This makes no sense to me. This makes no sense to me. Tracy, are they going to kick us out? I don't know. Let's get on with it. There's all kinds of fines and stuff. They can require training. There's things that they can do. Yeah, Tracy. There's kicking us out. Probably not. I don't know what all, I need to read through all that. I don't know. Maybe they'll get into that, but it's baffling to me. Preventing misuse of MLS logo. Do your part. Do your part. Nettle Freeman came to the MLS executives with a specific ask. Make sure you're using the Realtor MLS logo properly. She explained that associations of realtors, MLSs, and members can use the MLS logo, but the MLS must be wholly owned or controlled by the Realtor Association, and the governing documents must comply with NAR multiple listing policy, Nettleford Freeman said. The MLS logo is only used for stationery, forms, websites, and MLS-related promotional materials, she noted, adding that if anyone had incorporated the logo into a piece of jewelry or a lapel pin, just put it into your pocket right now. Money? Yeah, they're probably wanting money. Just put it in your pocket right now. Regarding co-branding, only an MLS's own logo may appear with the Realtor MLS logo, Nettleford Freeman said. MLSs that are not Realtor Association owned may not use the Realtor marks, and neither can MLS participants who are not Realtors. If non-members are advertising their MLS participation, they must clearly disclose their non-member status, she added. You know, honestly, if you want to instead of taking a position of a police force and coming down and wanting to track them and be proactive, you're forgetting again, National Association of Realtors, that you are a trade organization that has members that choose to join you. Okay? They make a choice to join you. They are your clients, guys. These are not citizens of a city here where you've got to police them, putting undue pressure on them. What I would encourage you to do, if you want to go this route, you should just do better training. You should talk about the importance of the brand. You should make people feel value in supporting that brand, and then how to do it correctly and why it's done that way. Not this. I mean, we should all just go to the NRA alternative. It's like freedom something. Yeah. What is that one called? Yeah. This is the thing. It's I don't want to just cut ties at all, guys. I think there's a point for the National Association of Realtors and their advocacy and that kind of stuff. I think they serve that well. I think they do that extremely well. And they do other things, but it's 2 or 3 steps forward. Like I said earlier, 2, 3, 4 steps forward, 5, 6, 7, 8 back. This just doesn't make any sense to me. This is the wrong battle. To do otherwise would be a misrepresentation and would violate the registration rights and realtor trademarks of NAR, the lawful owner of these collective membership marks. Yeah, but let me say this, NAR. If there's no more members there, what value is it? What value is it? You guys own it. Okay. You're not championing the membership base that wants to stand behind that and be proud of that logo. This does not do that. It doesn't do it. Nettleford Freeman encouraged attendees to report any instances of trademark misuse. Nettleford Freeman encouraged attendees to report any instances of trademark misuse, which members can do via NAR's Realtor brand infringement intake form. Encouraging people to report on other people. Encouraging members to report on other members. We really ask that you do your part, she said. We ask you to preserve the integrity of the brand. No, let me tell you this, guys. If you want us to protect the brand, if you want us to be confident in that brand, I want to be able to go into a room with a consumer that was hurt by somebody that maybe misused the brand, maybe is just a real estate agent, and I can go in there and say, no, I'm a realtor because of this. And I'm proud to be one because I operate by the code of ethics. I adhere to this, and that's what a true realtor is. Let your members protect the brand. And you do that by making them feel important to the brand. You make them feel valued. You show them that you care about them. And guess what they'll do? They will protect the brand. They will protect it. I would rally behind it. I would go out in the street if somebody claimed to be a realtor and was a horrible real estate agent doing bad things, and I would tell the consumer, next time you need to work with a realtor. And I, as a broker and in my position, would encourage my agents, make sure you represent the logo and the trademark correctly so we are not associated with the ones that are not. I'd be excited about the brand. And you do that through invigorating your membership base and motivating them to show and stand up to with the code of ethics and the importance of that, the value of the MLS. You champion them. You train them on the reasons for the trademark. You don't police them. You don't police them. One of the biggest things that caused the NAR to have so many problems is that they became a police state when it came to the MLS. They started doing all these fines, other agents started reporting other agents on all this kind of stuff. That's why we're in this fight to begin with. And now we're going to do this over the trade association and the logos and all that kind of stuff and how we use them. And then we're going to be policed by AI. Come on, man. Gosh, this is a soapbox, but it's like, this is ridiculous. We really ask that you do your part. All right, yeah. Domino, I know realtors that are showing up to showings, high doing methamphetamine, getting arrested for domestic violence, DUI, but they're realtors. Yeah, I mean, there's always going to be, I mean, you're never going to be able to police. I mean, people are people. I mean, every trade association is going to have issues. I mean, when you're dealing with people, you're going to have realtors that are not good people, that do bad things, that break the law, the actual law of the state and the federal government, and they're going to break laws. And that's why you have code of ethics. And you have certain things that can penalize you for doing those things. But when it comes to like supporting and standing up for this brand, like, I don't think you do it by policing them. And you definitely don't do it by encouraging your membership base to report other members. I don't think that builds any kind of continuity there. I think you're encouraging the wrong thing. I really do. Matter of fact, a good attorney friend of ours would always say, shame, shame, shame on you for reporting other real estate agents. Like, you should be able to pick up the phone and call them and I'm not saying in a perfect world that happens, right? I'm not saying you don't ever do that, but like if your first mode of operating is just to report them and call them out and you don't pick up the phone and just try to build a relationship with them, if you don't tell your broker and your broker doesn't then call their broker and you try to mediate it yourself, like grown adults, like, and you listen to this advice, like, we really ask that you do your part. We ask you to preserve the integrity of the brand. No modification. Use the MLS logo only as permitted in the handbook of multiple listing policy, and let us know if you are seeing anything. Help us protect the brand. To do otherwise would be misrepresentation and would violate the registration license code mark. I mean, come on. Whew. I don't like that. I don't like it. I don't like it. Tracy, I'm always feeling like someone is watching me. Yeah. I mean, that's the point. That's really where it's very frustrating. It's like, man, they just hurt themselves. So they encouraged us. Let's just do this, and I need to wrap this up. I gotta get to another meeting, but let's just read this real quick. This is the NAR Realtor brand infringement intake form that they're encouraging us members to report on other people. So let's just look at what this is and what it is they're asking for us as members to fill out in response to those that have violated the infringement of the trademark, so we can do our part. Section 1, you get your information. Please enter your information here so we can contact you if we have any questions. You got your first, last name, email, and phone. Association, it's optional. You don't even have to report that. Your mailing address. Role relationship to NAR. What's that say? Former member, non-member, public, other. Section 2, infringement details. Please enter any contact information you have that might assist us in identifying a potential infringer. Name of individual or company. So you as a member have to name the other company or the other member. I mean, individual company address, where it goes. Individual company email, individual company phone number. Is the individual or company an NAR member or an association affiliate? Where did you observe the infringement? Select the location of the infringement. Domain name, online advertisement, print radio, mobile app, marketing, commerce. Type of infringement, unauthorized use of NAR, a realtor logo, realtor trademark, generic use of realtor, using the term in lowercase or as a substitute for real estate professional. Unauthorized use of copyrighted material, websites, URLs, include all that. Social media platforms and handles, put all that in there. Give it all to them. Physical location, where are they located? Date of the infringement was observed. Is the infringement ongoing? Please provide a brief description of the infringement, and then please attach any evidence that supports your report. If your document is larger than this, share it here. Section 3, consent statement. By submitting this form, I confirm that the information provided is accurate to the best of my knowledge. I understand that NAR may contact me for additional information, and report may be used to support enforcement actions. Kind of curious right now. What can National Association of Realtors do for someone that violates trademark rules? Let's see. See if we can find this, and we'll wrap this up. I don't know if it might take me too long. I was kind of curious. It'd be like a quick little what's happened, but I don't see it. Reported trademark infringement. I mean, it says if an agent violates trademark rules by misusing the word realtors or its associated logos, like a username or as a synonym for real estate agent, the National Association of Realtors or your local member board will take the following actions. Send a warning. Local member boards typically begin with an investigation and send a formal request requiring the misuser to stop and provide a written assurance of compliance. Impose penalties. If the violator is an active member, NAR enforces ethical standards and local bylaws. Local panels can issue fines, require mandatory remedial education, place the member on probation, suspend their membership, or even expel them. I think those are extreme cases. I don't think they'll do that. I don't think they'll go that far. Legal action, I don't think they're going that far. But they can do stuff. They can affect you. Now, I'll end here just as a reminder, guys. Like if this is happening, this is only one report. I'm gonna keep my ears open to hearing this because it just baffles my brain that they're doing this. This is the fight they're choosing. I'm gonna monitor this, and it becomes more of a thing. But here's what I would say. This is what I would say to every single one of my agents. I'm gonna be having this in my meeting notes. Is start cleaning up. Go to your websites, your social media, your email addresses, everything, your email signatures, your social media posts. Get familiar with the realtor trademark, because if this is true, if what they're talking about comes about, and I don't know if it's got it was in committee, so certain things probably have to go through the board, that kind of stuff. So we'll see what happens. I think if we make enough noise about this, hopefully it'll just be like, can we just not do this right now? Can we just work on building the brand back? But here's what I would say. And again, let me be a little bit kind here to them. Okay. Protecting the trademark. It's their right to do so. And as realtors, we should adhere to those trademarks. Okay. We should abide by them. We should go in there and clean it up and make sure that we're handling it correctly. I will give them that. If we're going to be members, we should abide by that. So I think we need to definitely follow that trademark. Okay. We should do that. We should start cleaning up. But anyway, that's where we'll rest. Tracy, Adam, thanks, Tracy. I appreciate you. Seriously. Thank you. I go to my way not to call myself a realtor anyway, even though I am one. Yeah. I get it. You're not alone probably in that. A lot of people kind of just, I just feel like the name realtor is more for us as realtors to say that, I want to abide by these code of ethics. Like I do. I want to be a professional. I want to belong to an association that has my best interests. I want the legislative lobbying that does help homeowners in general. The whole entire real estate industry, I like that. The MLS it's very important. We need to reform it, but it's very important. The training that they could be doing and offering, which even in regards to trademark, like this needs to be just training. Like let's train our agents to be proud of the logo and how to use it correctly and then correct it that way. How about try that first, then using AI to police us? But anyway, there you go. I appreciate you guys for being here. I will be live streaming again tomorrow, 8:30 a.m. Eastern time, where you're watching me now. So we'll be back here to do that again. Maybe it won't be such a soapbox moment, but it needed to be said. But anyway, you guys have a great day. Good Monday. Get out there, make some things happen. Let me just leave with this too, is don't dwell on these type of things. I mean, honestly, it's fun to kind of talk about it and kind of hash it out, and it's important to do so. But at the end of the day, keep doing your job, keep your head up, look forward, do not focus on these type of things because you can get kind of distracted and not accomplish what you need to be accomplishing because in the end, it doesn't really matter. Domino, quick before you go, what's your favorite lead gen? As far as like lead generating, oh yeah, you might not like it. You might not like it. Most agents don't like it, but it's going to come down to like farming. I mean, it is definitely that's the most consistent way to control and leverage without spending a whole lot of money. I like. Thanks. Yeah. See you. Yeah. I like the idea of being able to build relationships more than I do spending money. I'd rather keep money, keep my income high, expenses low, and get in front of as many people as possible. And there's many different ways to do farming that's not uncomfortable. And that's my big thing. It could be door knocking, but it really is kind of getting into the weeds, understanding certain turnover in certain markets, and then marketing yourself there. That's where I lean. It's the one that works the most and builds relationships in your community. So that's my favorite. That's my favorite lead generating. Yep. Thanks for the question. Appreciate it. All right, guys. That's great. Thank you for being here, taking your time out of your day to listen to me ramble on about all this. I greatly appreciate it. I do not take it for granted. Thank you for being so active in the comments. I just love it. I love that tremendously. That is your real estate brief for today. If you found this helpful, please consider hitting the like button to tell YouTube you'd like to see more of this type of content. And consider subscribing and follow me on TikTok to join a community of real estate agents that are focused on building a business that is relationship focused first. There's always more. We will see you tomorrow and we'll pick up from there. Thank you guys. Domino says, just quit Zillow Flex because it was gross. Yeah. It's so expensive. It is so expensive. When you can go out and you can farm properties, I think without spending any kind of money at all, I think that is just very, very helpful. Bobby, have a good day too. Yep. Thanks for being here, buddy. Steve, thank you, sir. Thank you for being here. Yeah, awesome show. Thank you. I appreciate it. Guys, well done. Thank you all. We will see you guys tomorrow, 8:30 a.m. Eastern time. Take care.